Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at the Bitcoin daily analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, when you find value at any time during the video, feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts in the comments or on Twitter. Appreciate it. Let's dig in and take a look at the news first. In the news, we have the SEC ruling on, I don't know how to pronounce this one, Tucrium Bitcoin's future ETF. And that could impact the future of spot ETF funds. And what this means is that Tucrium, Tucrium Bitcoin Futures Fund, it's a mouthful, was filed under the Securities Act of 1933, the regulation on which spot Bitcoin ETF futures are filed. However, the previous Bitcoin futures ETF were filed under the Investment Company Act of 1940. They're two very different acts. And so this could set up a challenge against the SEC if they rule against them. So, but if they approve, this could be a door, an opening for additional spot ETFs to go the same route. Bitcoin transaction fees hit a decade low. This is mainly due to two reasons. The first one being the Lightning Network that's contributed massively. Additionally, the SigWit, I think that's how it's weird names. SigWit, that has also the adoption for SigWit has helped tremendously too. So if you need to transfer your billions of dollars in Bitcoin, feel free to move them because they only cost a couple dollars or less than $1, depending on your amount. Terra's every time I see Terra LFG, I want to say something else instead of the Luna Foundation Guard. They bought 5,000 BTC after Bitcoin dropped under 45K, and this beat MicroStrategy's recent purchase as well. So it's a tight race between these two. In Do Kwon's tweet, he said, today I water my plants, wrote some emails, bought 230 million in BTC, vacuumed the house, had some McDonald's. Now off to walk the dog. What a life this guy's got, huh? All right, that does it for the news. Let's dive into the Bitcoin charts and take a look. So first of all, we have Bitcoin. Well, not Bitcoin. We have the crypto market heat map. I showed this earlier, but this is the more recent copy. Bitcoin is currently, or at least at the time of the snapshot, 43.8 K, down 4.25. It dropped even lower, 40 in the low 43s. Dominance 41.29, and everything else is pretty much red. A few stable coins are in the green, so and Leo, but even Luna's down. So yeah, not a good day for crypto market or the equities market. Let's dive into the daily charts here, and we'll need our mouse highlighter so you can see. Daily chart on TradingView. We have Bitcoin printing a second bearish daily candle here, and it dropped below the 40. It's been riding this 46K resistance / support for 6 days, and it finally dropped below. And then yesterday and today it dropped again, and this time it dropped below the 44.5K support zone. Additionally, it dropped below the bull market support band and the middle basis Bollinger Band line here. So that's several very critical support levels that it crushed through. If it remains down here, it's going to be very bearish, and I'll tell you why. Let's go back. Let's go back to follow this middle basis Bollinger line here. So if you look here, whenever Bitcoin on the daily chart drops below this the middle Bollinger basis line, look how long it stays underneath. I think I moved something. Okay. See, it stayed for many days on this drop here, and then here it moved above the middle Bollinger Band. You see that? And then it drops again, but look how many days it drops. It stays underneath. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Around 12 days. So almost 2 weeks. Let's go again. Popped above for a couple days, dropped below. 1, 2, 3, 4, 5, 6. Well, if you count these two as being above, they're still below, so I count them. So this is 3, 5, 7, 10, 13. So roughly 13 days here, almost 2 weeks. And here it popped above, stayed above, and guess what? Dropped below again. So statistically speaking, it could be, if this candle holds today, it could hang around the bottom of the Bollinger Band, even though it'll be up here because the middle basis Bollinger Band has been increasing. So it's at an upper range, but it could be down below it. More than likely, the middle basis Bollinger Band is gonna kind of curve up and go sideways, but it'll stay underneath it, even though it'll be higher than this range down here. It'll stay underneath it for up to between 10 plus days, or 10 days or 2 weeks, or even more. So that's something to keep in mind. And right now it's still below the 200-day moving average and the above the 50-day moving average. This pink line here, the 50-day moving average is at 41.8. The 200-day moving average is still at 48.3. Also notice the current daily volume finally broke above the moving average by a decent amount. So this move here, even though you get all this news about, MicroStrategy and Luna Foundation Guard buying up Bitcoin and stuff, it can still drop. My recommendation is, and it's not financial advice, is that as it drops into the low 40s and upper 30s, you want to layer in and get some in there. And then if it drops some more, keep layering in, but don't layer in everything. You want to keep some dry powder for when it drops even lower, if it does. Let's go down and take a look at the indicators here. The white J line of the KDJ continues to descend. You see that right here? Below the blue K and the red D lines here. All three are trending down, but the white line is trending down sharper. Notice it's also entered the bottom range. The bottom starts roughly around 20 and to the bottom range. And it's currently at 5.9. And if you look at the bottom range, it can go as low as, let me move this over so we can see here. It can go as low as negative 11.2 there. Yeah, that's probably the lowest back in February the 21st. So it can go a little bit more, but it's in the bottom range. So what it can do is go a little bit more, curve down, and start to curve round the bottom, start to curve up. I give that a bear. Additionally, the MACD, the white MACD line, pierced down through the red signal line, and it did that yesterday. Yesterday, this was a sliver of white, but it's actually, by the end of the day, turned reddish. And so it put in the second bearish histogram bar here and ending its run of bullish histogram bars. And the currently the white line is at 1,208. And I gave that a bear also. Let's go down to the red RSI. The red RSI line is trending down sharply to 49.61. I gave that a bear. 49.61, that's just roughly in the middle of the RSI range. So that's somewhat neutral. It can go up or down, but it's pointing down, so it may trend down some more. The blue CVD line did move similarly. It rounded off and trended down to 1.829 million, and gave that a bear. The white momentum indicator dropped again for it's been a week-long drop, but the current drop is even sharper. So the decline in momentum is very sharp here. It dropped to a negative 2,874, and I gave that a bear too. So in summary, this chart, I gave it 2 bears and a crab. Breaking below the support level is huge. And if it maintains that, it could chop in between this range here, between 44.5K and 42.5K. It'll chop there. More than likely, it'll chop on the upper end, unless there are more negative macro news or the market becomes more concerned about inflation and the Fed's raising rates, etc. Max Pain, we'll go through Max Pain in the next few charts here. But yeah, overall, it's gonna be choppy, more than likely below here if it holds below this now resistance level at 44.5. Max Pain for the 7th will be 45K, or estimated to be 45K. If I can move this forward. For the 8th will be 45K. For the 15th, 46K. For the 22nd will be 46K. And next we'll take a look at the heat map. Here's a close-up of the heat map so you can see. Here's the trend down here. And if you watch my earlier video about the market, basically we had the Dixie when it's increased along with the 10-year yield. And so when the Dixie increased, normally it has a negative correlation with Bitcoin. So Bitcoin dropped along with the stock markets too. So you can see the drop here. But this is the major drop. But this yesterday at around 5 o'clock, it was up here, started to drop here. This is where the market opened, right around here. Right here. Here's the zoomed out view, so you can see sell levels on top, sell walls on top. Here's one at 50K. That's still there, but notice that it got lighter. It was more deep orange, deep red here, but it got lighter here. And this wall right here broke off here and dropped down to here to push the price down. Buy walls are below. We have 35K wall here. Before we start, there's a light spoof wall here that's trying to prop the price up right here around 43. Below that, we have 35K buy wall, 32K, 30K, 25, and around 20. So not much has changed as far as the major buy walls. They remain there, but they're still there. The high liquidation levels from High Block Capital. This one's interesting. As the Bitcoin price dropped, the high leverage 25x to 100x levels increased, and the open interest, the difference between the short levels here, the open interest, the money in short levels and the money in long levels, you minus them, you have an overage of shorts at roughly about $5.66 billion on Binance alone. This level tends to trigger short liquidations. When smart money or whales take the opposing direction and they go long and they influence the price by buying up the spot market and cause the price to go up while they take a high leverage position on the perpetual futures market, and they win over here many more times than they did buying on spot. So expect the price to bounce back up and clear some short liquidations level here. And we're back to the beginning. I hope this Bitcoin daily analysis added value for you. Feel free to smash my smash the like, ring my bell, hit subscribe if you haven't, and also share your thoughts in the comments or Twitter. Appreciate it. Peace.